Hey, I was supposed to upload a video a few days ago, but let's just say I got kind of lazy, and I also don't trade market on Friday since I've been burnt way too many times to count. So I'm gonna start off by saying like we had a very good month on the NQ, right? And I wanna like start every month by doing, just like kind of like a general outlook of where we are and what are levels that are important to us throughout the next month, right? So I'm gonna delete all my drawings on QQQ. Let me delete everything here. Delete drawings. Let me delete spy. Let me delete yes. Delete that. Okay. So let's just start with our chart. Very simple. We have a NQ chart, and we're looking at the monthly time frame. So roughly 30 days of data, which is really significant for us, right? We see that in March we had a very small range, indicating what it could indicate a lot of things, but small range, and then we had a larger red month on QQQ, and then we had two green up candles, right? Let's just look at the last five. So from February onwards, the last five candles. Let's just do our analysis, right? So we want to start off by just starting with the high and low of the month, right? So we could do very rough things. We can do like a very rough low, which is going to be around here, and a rough high, which is going to be around here. Pretty good candle, right? Like you can see, pretty good candle. The volume on it was nowhere as good as the red candles are. I mean, if you notice, like the red candles usually have more volume. Usually what this means are like people are generally faster to buy the dip than they are to buy at all-time highs. For example, like if you see like any of the wicking, if you see wicking on these candles, you'll notice like this. You'll notice that the wicking has higher volume than most of like for example, like this red candle, right? Even though it's a big red candle, the volume of it is lower compared to this red candle, which has a lot of wicking on it, and it indicates that it's more algorithmic. Oh, I can't speak right now. But it's more algo based, right? Like people have their buy orders, sell orders from the start of the month. They end up getting filled, and it's just how people could be like DCAing basically. They just like don't have to like worry about a day-to-day time frame. They just like set their limits. If it hits, it hits. They fill like a bunch of shares. If they don't, they don't. And that's how a lot of people trade. So it's very important to know where we are in the grand scheme of things. Let's start dropping time frames, right? So we have our daily time frame, we have our weekly time frame. On our weekly time frame, you can notice we're still within this monthly range. It's not like we've broken out of the monthly range yet. We're within that monthly range. Nothing is, super eye-popping right now. We did test the top of the range, and we got rejected. We haven't tested it this week. We did have a decent amount of selling. We do have this huge gap that formed by this week right here. We have this gap, which can act as a level of high buying interest, right? Like if you wanna buy, you wanna buy within this gap, preferably closer to the bottom of the gap, which would give you a smaller risk reward, right? Remember how I said like the red candles generally have more volume, right? And with that volume, you expect a larger move the following week, right? So with this was a red candle, and it had more volume than the previous weeks. My assumption is we're probably gonna test the top of the range again this trading week. If we drop down to the daily time frame, we could see, look, like we're stuck in this zone of, we gapped up because of the rollover, the contract rollover, and we're trading above it. We try to go below it, and it seemed like we're unable to, and we did get a heavy bearish candle on Friday. We opened super high, right? Like we opened up almost, if you look at the 5-minute time frame, you'll notice we opened really high. Like we took out pre-market levels. We were basically just like almost skyrocketed to what anyone would have thought as a test of the monthly high, and then out of nowhere, right, we started falling. Now I want to ask you guys, like, how can you tell like you, how can you really tell like what's gonna happen? Like people, a lot of people in my Discord are asking me like, hey, like where did all this selling come from? Well, I want you guys to remember, like everything comes with context, right? Like, so if we have a big up move, right? We have a pretty good up move. This particular candle, this 10 a.m. candle, had really good volume. Then we get this red candle, this 10-15 candle, which was a bearish engulfing candle, the previous candle, and had more volume. What did that like signal to us? It signals to us, yes, there is a chance that the bears are gonna fight today. And then the next candle, right? It's a small candle. Ideally, if you want to see a continuous uptrend, you want to see the next following green candle close above the wick of the previous bearish candle, and we were unable to do that, and it also had low volume. And what did that signal to us? Oh no, that means not good. We're either gonna consolidate in this area for a long time before we break out, or we're on our way back, and the bearish engulfing candles like give us that story. I also want to make you guys remember something. Like this is what all this is super important to remember with context, right? Like there's no point of looking at NQ if you don't know what QQQ, the index QQQ is trading. I mean, like the index QQQ has higher volume, so you want to be looking at something with higher volume to look at like why are we trading like this? Like why are we trading NQ? Why is NQ trading like this, right? Well, and I want you guys to take a look at this. Before I even say anything, take a look at this. Why did we crash? What the hell happened, right? Okay. Well, what if I say this? We have a bunch of sell orders on at our all-time highs, right? We always want to see how market reacts to all-time highs. We reacted to all-time highs. We wicked off of all-time highs. Now, when you see that happening, we see that happening on higher volume. If you see that on the 5-minute, you'll notice that there's more bearish volume. There is more bearish volume on this 10-15 candle yet again than on the previous candles, and you can see on this rising uptrend we have decreasing volume, right? That signals to us what? That signals to us that there is going to be levels of us, like seeing there's going to be some test ahead of us as soon as we break all-time high. I mean, you can see this level, this yellow level, we broke all-time high, and all of a sudden we get met with a bearish engulfing candle. Not exactly the greatest thing ever. And I want to show you guys on SPY what that looks like. On SPY, you want to make sure that the same exact things are happening. You don't want to be trading for the indexes separately. Same exact thing happens on SPY. Look, we broke all-time high, right? Bearish engulfing candles start happening around 10-15. On higher volume, 10-15, you can see, boom, we completely took out that level. 10-15 had higher volume, and we just traded downward from there. And you can see the 200 EMA, this blue line is the 200 EMA. This is 200 EMA. Try to add to the resistance for us, but as soon as we get another candle that just completely crushes us, from the rest of the day, it's just like looking like crappy, right? Like you can see this big bearish candle with very minimal wicking. As soon as that happens, the trend is broken. We're looking only for shorts, right? That's how I interpret it. It's very important to like look at everything with context. And you could, if you look at ES, you can get a similar idea of what happened. ES getting to this higher wicking level right here. We tested it. SPY and QQQ went for all-time highs and rejected. So it's not a mystery. It's not a mystery where the market wants to go. It really, really isn't. And I want you guys to remember that. It's really never, ever going to be a mystery where the market's going to go. And if you feel like you're just guessing, you're doing it wrong. The market should never feel like guesswork. It should feel like you have numbers on your side. You have probabilities on your side. Hey, look, we swept all-time highs. We're reacting poorly on high volume. Hey, maybe it's not a good idea for us to enter longs right here. And that's what I want you to think. Like, just think like that. Think of that mindset of like, what exactly is the given context of what the price is doing right now? There's always going to be given context on a day-to-day basis. What is exactly happening? And I'm doing this incorrectly. I should be doing this in the monthly time frame. So here is our QQQ monthly range. Really large range, might I add. Really, really large range. We have a very, very big range for QQQ to trade this month, the following month. And the same exact thing can happen with SPY. We can draw our little levels, right? And then we have, yes, our even more levels. And I want you guys to just alternate the time frames. If you're trading NQ, if you're trading ES, look at SPY and QQQ. That extra 2 minutes out of your day will just save you so much money in the grand scheme of things. Don't be lazy. Like seriously, it's not worth being lazy. Like just do the smart thing and look at the entirety of the indexes. It's really important to understand the full context of everything going on. So now that we have monthly levels drawn, let's like just continue to draw time frames. We have weekly levels to draw. Like weekly, we will have highs and lows of what was the highs and lows this week. Okay, so we have a high right here, a low right here, and of course off stream I will or off video I will draw the levels that are better with more clarity, more colors and whatnot. Same level, high low, low, and then we just drop down to the daily. Super simple stuff. Look, like it should never feel too difficult. We have this range right here. Beautiful. On Monday, something's gonna happen. Either we will react to this level right here and go up, or we will gap fill this level right here. This little gap up. Not guessing work. This is exactly what you like. This is exactly what the charts tell us, right? Same thing. On ES, we're at a very key support level, as you can see. NQ, we're not there. If we see QQQ start wicking up, why is that? It's because ES is on a very key specific level. Now let's say NQ breaks its support level right here. ES is gonna drop faster than NQ because ES's support level is a lot higher. So once that support breaks and NQ support breaks, it's just basically doom. Do you understand what I'm trying to say? Does that make sense? Like, you want to make sure you see the full context of these things. So I'm continuing to draw some daily levels right here, some daily levels, daily, and some daily levels. There you go. These are all the levels I'm looking at. Monthly, my monthly levels right here, my weekly levels, and my daily levels. I come into that on Monday, and I'm just gonna look for levels to break, look for levels to react, look for levels to do anything they want to do. If they don't do anything, we'll trade in between levels. That's completely fine. But as soon as I have my target, my game plan set, I'm gonna follow it. I don't want to make this video too painstakingly long. I think I made my point pretty clear. Make sure you get the full context. I'm sorry if there's background noise in this video. It's really hot where I live, and it's really humid, and today's a really disgusting day. Yeah, I'll catch you guys in the next video. I hope you guys actually watch these videos all the way through. If you do, leave a comment, leave a like. You know what it is. I'm just gonna be grinding this summer, man. So if you want to stick around, stick around. We're gonna make some money together. Bye, guys.